Hello traders, welcome to your daily market update for Tuesday the 23rd of June 2015, and the US dollar pops. We did see it push higher on the back of existing home sales, as you can see here, and consumer confidence. All the aspects of the US data come in quite strong, and I believe that the home data was the best that they've seen since 2009, November 2009. So we are seeing the housing market definitely pick up there. The rest of the session was purely consumed with Greece, and the circus continued. It was quite entertaining, providing that you've got a sense of humour about the whole situation, as it has been a bit long in the tooth, and it is quite dragging out and being painful, but nonetheless we are getting to the pointy end, and it seems that there was a lot of optimism in the market. We've seen a Greek proposal put together. There was a lot of talks about how they were very close to a deal being done, and potentially on the back of that we are seeing a lot of optimism around the markets. Not necessarily the euro though. Greek stock market rallied. All global indices bounced, and the euro didn't. So the euro is being a lot harder to convince, and but we've seen that all along. We've seen the euro be quite unchanged in recent weeks on the back of commentary regarding the euro, and perhaps currency traders are just being a little bit more stubborn, and they've heard the stories all before and are going to wait for a result. Now, a result isn't going to come to fruition immediately. Even if Greece doesn't pay, don't forget we can get further extensions, as we've seen many times, and a default won't occur just because they don't pay by the 30th, because then the IMF will give them an extension of time, give them every opportunity to pay. So it's going to be a long-winded process, but just be careful. The market may start pricing in the default as a result of them not making a payment. They may interpret that as just a given default. Nonetheless, there's still the opportunity of a deal. It seems that they are swaying a little bit on their hard rules. There's still the sticking point of the age of pensions. So we'll have to wait and see if they can come up with a deal. We do have another meeting tomorrow, and we'll see how things go. But we've definitely seen a big shift in the market. Greek yields, bonds. We've seen the stock markets, as I've said, but just the euro didn't move. So moving over in today's session, we do have a fair bit of euro data. We've got some French, German CPI, PMI. We've got some manufacturing from Europe as well, and the Eurozone PMI. So we do have a fair bit of data there, and I think the data is going to be quite strong to stable. And we're starting to see a trend of the economic data coming out of Europe not being too bad, considering the weight that Greece is putting on it. And that brings up an interesting point where I believe that we will get a relief rally on the back of a Greece deal. And I think that if we did get a default, we would get a sudden sell-off on the euro. However, I think in the long run, if Greece was to leave the Eurozone, the euro would be better off. And ultimately, the economic data would suggest that in time, and we would see a much stronger euro than where it is right now, that's for sure. Moving into the US session, we do have a fair bit of US data. As you can see, we've got durable goods, which is going to be quite important. We're going to see some more house pricing. We're going to see some PMI as well. Overall, I think this data is going to be strong for the US dollar, and on the back of yesterday's home sales, the US dollar strength was dominating the market, and I'll go to the charts and you can definitely see that. And if the data was to continue to be strong throughout today's session, I think that US dollar bounce can continue. Speaking of the US dollar bounce, you can see it right here. If I zoom in for you, you do have the bounce on yesterday, and today it's continued as well. So I believe that the market is starting to really think about, with the data, if it continues to come in strong, we really start to consider that we will be getting an interest rate rise this year, becoming a little bit more convinced and starting to price it in early before we actually get any more data from the Fed itself telling us what their plans on doing. So I think there's more upside to come. We do need to keep an eye on some key resistance levels, and we are still in this downward channel. However, for now in the short term, we have got ourselves a bit of a bounce. Going over to the daily chart, the New Zealand dollar, of course, as I mentioned, was nothing but down is the future for it. And for whatever we've got the strong US dollar, that slide's continuing. It continued yesterday, and it's continuing on in today's session. There's some more downside, I'm sure. However, we have had some pretty good falls, so we'll see how low it can drift, keeping an eye on resistance levels for the US dollar. And if we do get the US dollar find a little bit of resistance, we may get a little bit of a short-term bounce or correction moving over towards this trend line before we have our next move lower. But nonetheless, in the longer term, I still believe that the New Zealand dollar will be heading lower. The Australian dollar also rejected the higher end of the range, and it has started to move lower, as I mentioned, was possibly the case on a stronger US dollar. We've still got a fair bit of room to the downside, so if we continue to see the US dollar strength, I'm sure that we will see it move lower. We did have a slight tick up in Chinese data earlier today, but that wasn't enough. It was still in contractionary territory, so I believe that the market really dismissed it, and the US dollar strength is going to continue to maintain supreme on this chart, and we could possibly just move to the lower regions of this range bound for now. The euro also rejected and resistance level, and we have moved lower, and it has pulled back mainly today, and but we did see it want to move lower yesterday. It struggled to move higher on the back of all that optimism, so it was the path of least resistance, and it actually gave in and moved lower once all that excitement was past, and we were focusing on the US dollar from that point on. We still have the 200-day moving average that we need to keep an eye on, keeping a cap on the rallies for now, and we'll see exactly how the market rolls out throughout the coming sessions. Of course, if we do get a deal, I'm sure that anyone going short would be caught out, and we would get a break through this level and the 200-day moving average, and we would be pushing up into the higher regions. However, if the troubles continue, I'm sure that we'll continue to get a slide within this rising channel that we have here, but I don't think we're going to see any fireworks just today. The Great British Pound did have the pullback, and as you can see, I'll zoom in because it's probably a bit small on the chart. We are back below the previous high, and depending on how strong the US dollar carries on throughout the remainder of the week, because we don't have any pound data, as I mentioned yesterday, we could get a pullback. Major support is at $1.55.5. And if we do get a pullback and considerable momentum on the US dollar, that would be an area of considerable strength that I'd be keeping an eye on, and we'll see how far the pullbacks can go. Move to some shorter time frames on the 1 hourly and such, and you can see that it has broken through some trend lines. Do some technicals, and you might be able to pick up some swing trades to take advantage of the moves lower. US dollar versus the Canadian dollar, we did have that bounce. It has continued on the back of the strong US dollar. However, we are coming back up to test this infamous $1.23.5, $1.24 resistance range. Once again, as I mentioned yesterday, the historical support area has become support, has become resistance, and now is resistance once again. The market's testing it, and if we did get a breaker back above it, well then ultimately we'll be looking at between 124 and 123.6 or 123.5 as being support for potentially the next move lower if the US dollar strength continues. So the US CAD running into resistance, but we'll see if tonight's data can actually push us through that resistance level on the back of potentially some further strong information coming out. US dollar versus the Japanese yen has bounced, and it does look like it wants to make a floor for now at 122.4, as you can see there. It didn't quite get down to test the highs, and as I mentioned, buying anywhere down around these levels for the longer term was a good option, and I still believe that to be true. And if we continue to get some strong data, I'm sure that the moves will continue to extend higher for the longer term. As the market becomes more and more convinced that we will get an interest rate rise at some point this year, I think, with data continuing to improve. Well, that's it from me today. Good luck trading. Keep an eye on the data and some charts, and it's good to see that we are getting some price action on the US dollar and some other pairs. I wish you all the best of luck trading, and until then, trade well.